Hi, this is Zach Mayer with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 15th of May. Starting off with the FTSE 100, which is nearly up to the 8,500 level. We were 16 points short on the intraday high so far. That's obviously the top of that rising trend channel from 2007. Looking more closely, you can see that we've got a late January rising trend channel, and we're looking to get to 8,500 off the back of that as well. In the meantime, ideally we stay above 8,400. Probably the line in the sand for our purposes is 8,330, which was a resistance on the way up and could become support on the way down. Moving on to the DAX, and here the picture was of a bit of consolidation to start the week, but we bounced basically at and above the old 18,500, 600 resistance zone from March, April. And looking for a top of October rising trend channel target as high as 19,300, which could actually, the way things are going now, happen by the end of this month, which would be quite an achievement. On the downside, below 18,600 now, looking at 18,200 as a worst case scenario if there is a rug pull. The Dow is next, and here the picture decent. We had the gap fill there, the April gap down fill towards 39,500 and above that. Looking for obviously a retest of the best levels, record levels, towards 39,900. Ideally we get up to as high as 41,200 by the end of next month. And also we stay above the 50-day line, 38,700. Now rising ahead of that move towards 41,000 plus. The other point to note is that we have had a bear trap island reversal, so gapping down in April, gapping up in May, and that does tend to be one of the strongest charting setups around. Moving on to Bitcoin, and here the picture steady, at least steady above the 60,000 level. Still have the risk of hitting that March or retesting that March support line projection to 57,700. And worst case, we would need to test the 200-day line currently near 52,000 and initial February resistance. But the way things are going, looks as though the worst is possibly over here. The only thing missing is that the way the RSI is still below neutral 50. So probably not out of the woods officially unless that RSI goes back above neutral, because otherwise we have a triple RSI 50 failure, which could drag this market down. Moving on to gold, which yesterday was not looking that happy, but seems to just be finding support out the floor of that rising trend channel from back in February. The latest support's 2330 or so, and that's encouraging given the way that we were factoring in the potential of a move down to the 50-day line 2280.90 ahead of any possible retest of the 2448 resistance of last month. Through the 2365 area, we are looking for 2400 plus to happen pretty soon. Maybe we manage to get there well before the end of this month. Moving on to the stocks, and starting off with Ajax, where there's been a rumble of movement. Here, we were looking for the stock to break that line of resistance there from June last year and the 50-day moving average, which tends to be what one looks for at the bottom of the range. We're also looking for an end of the close back above basically 3.55 pence, so that would be a bear trap below or from below the old November to March support. About 3.5 pence is the level, and above 3.5 pence is a bear trap, and the target would then be 5 pence perhaps by the end of next month or even sooner at the top of that broadening triangle from back in November. The other point to note is that there is an uptrend line in the RSI window as well, so lows for April, May, with the RSI staying the same or actually being a bit higher near the lowest levels around 10, so that does look very oversold. Moving on to stock which has been very difficult to chart, and that's even within the realms of the small cap area. Here we've got a rising trend channel at Audioboom. The floor of the channel looks to be recent support around £2.30. And ideally today we would see an end of day close back above the 50-day moving average. That's around the 254 pence level. Above that, we're looking for the shares to zigzag up to £3.50, perhaps as soon as the end of the next month. The other point to note is that we've, with today's price action, we've got an end of day close above the top of that gap there, £2.40. So that would be a gap close buy signal. Also a little hammer candle in there as well from the beginning of the week. So looking better at Audioboom, especially if we can remain above the 230 zone and the rising 200-day line now, giving this a better look than it has for quite some time. Next up is Abingdon, which had its Boots deal revealed today, and here the share's up a little bit, up 10%, which is not bad, I suppose, but probably, given the news, probably would expect a little bit more. The favoured target now above the broken resistance line there from back in June, up to 14 pence perhaps by the end of next month. Got the 50-day line rising. We've gapped up, actually. It was a bear trap gap reversal. It's actually a very strong setup there. And so, as I said, one would expect 14 pence or more over coming weeks. Ideally, we stay on the right side, obviously, of recent 9 3/4 pence. Support onto Clontarf, which reminded me a bit of the Mosman situation. Said an extended bumping along the bottom process, trading along or near the 50-day line. The shares spiked up today finally, and the target here has been 0.71, or 0.071 rather, which is the December resistance line projection, and obviously we're looking for that over the next couple of days. Main resistance here at 0.08, and hopefully today's move is not a one-day wonder like all the other ones of the recent past, and we get up to 0.08, even if the shares fall away after that, and even if the company does a fundraise, which quite a few of the stocks have done of late. I think LifeSafe and Oracle Power amongst the many. Moving on to Castillo Copper, or Castillo Copper if you're English. Here you can see that we've had a bear trap gap reversal, which is quite a beauty actually, and today broken the gap up day at 0.3 pence. The view at the moment is that while we're above the 200-day moving average at 0.33, looking for the top of that broadening triangle from back in July at 0.52. Hopefully by the end of this month or much sooner. Obviously, the copper price is really doing the job for stocks like Castillo. Moving along to Cadence, and here we can see that shares are making their first decent moves after the recent fundraise. Here it looks as though we've got basically a sort of a neckline break, recent resistance, April-May resistance around 3.8 pence. Above that, looking for the old support, February-March support around 4.5 pence. Best case would be up to 5 pence plus by the end of next month, while we remain above 3.8 pence. RSI is also pushed above the neutral 50 level. On to Character Group, which I think had an announcement a few days ago. Here we've got actually an island gap reversal, so gapping down back in January and then gapping up for earlier this month or last week. The initial target here was £3.40, and looking for that obviously over the next few days. If you're a fan of the shares and looking for greater glory, then the upper parallel of that rising trend channel would be the place to look for. And at the moment, that is heading as high as £4.40. I suppose before that, we've got the old 2022 support there around £3.60. But as I said, if you're a fan of the shares, £4.40, maybe by the end of next month, could be on the cards. Ideally, in the meantime, we stay above the old peak there from December at £3. On to Cleantech Lithium, which has behaved itself and done exactly what we wanted it to do. The only thing left now is the old November resistance at 33 pence. We've filled the gap and pushed above it. The old November gap there at 25 pence, so above 25 on an end of day close basis, looking for 33 by the end of, perhaps by the end of this month. Ideally, we stay above the initial May resistance at 24 pence in the meantime, but hopefully we can get away with 25 pence plus. On to a requested stock next, which has not been very nice for holders over the last 2 to 3 months. What's interesting here is that we've got a double ricochet, double bear trap rebound from below the still rising 200-day moving average, the black line there. The key, though, is that we break that line of resistance there from back in January around the 0.125 level, so 12.5. Above that, we could be looking at 0.22 rather by the end of next month. Obviously, we want to stay now on the right side of 0.1 on any dips that may occur. Moving on to Faron, and here one of our favourite activities, or favourite stocks and charting activities of the recent past has been this situation. Beautiful W-shaped reversal. Initial target here, or actually the initial target here was around 160, second one around 204, and above that looking for as high as 284 by the end of this month. Moving on to the mighty Kavango, mighty because it's had a great rally over the last couple of months. Not too far away now from our target there, the purple line, which was heading for 1.65. I'm not going to necessarily upgrade that yet, but at least while we're above the old April peak there around the 1.45 level, looking for 1.65. Obviously, you can see from the chart, looking back, above 1.65, it would be up to the 2 pence area, which was late 2022 resistance. But I think let's get up to 1.65 first after multiple gaps to the upside, something which normally indicates a lasting re-rate, and also indicates that one or two people have been caught short of this rising situation. On to the Aquis market, which I'm one of the few who likes looking at. We've got the situation here at KR1. Here the shares have broken that red resistance line there from back in March. They've broken it around the 76 pence level. We've got the floor of the rising trend channel there at 74, so basically above 74, initially looking for 50-day moving average at 86 perhaps by the end of this month, and then you've got previous resistance on the way down at 95 pence. Hopefully the 95 pence area could be seen by the end of next month. The only missing piece of the jigsaw here is that the RSI is still below neutral 50 at 48. We haven't been above RSI 50 since back in March, so maybe overdue that happens. And the final point to note here is that we've had support, triple support there, above a rising 200-day line. That also indicates a lot of technical strength waiting in the wings. On to the last two. First one is MicroSalt, and here shares moved very well indeed. If I can get the right company, you can see that we broke a trend line just the other week around the 73 pence level. At that time, we were looking for the shares to hit that line there at 104. So far, it's been up to 103.5, so not too bad, but gapping up today very well, and an end-of-day close above that line. 104 could take the shares up to as high as the 127 pence level, the upper parallel of that rising trend channel, by the end of next month. Ideally, we stay on the right side of the floor of the gap, the latest gap at 95 pence on an end-of-day close basis. Finishing off with Vodafone, one of the most difficult stocks ever to look at, and to chart at least. Here, finally had the breakout, proper breakout yesterday through the resistance zone there at 72 pence, let's call it. Above that, looking for a red September resistance line there at 80 pence, hopefully over the next week or two, certainly by the end of this month. Obviously, shares have got a lot of work to do to regain their former glories, but with the FTSE at record levels and the €500 million share buyback, things should hopefully be on the move. At this stage, only an end-of-day close, or at least a weekly close, back below 71 pence, and the 200-day line really questioning the recovery, hopefully a lasting recovery situation, especially on the basis that we've closed the gap there. We've closed a gap closed buy signal there above the old November level at 74 pence. So the best thing here would be we stay above 74 ahead of a move to 80 pence plus. That's it for me today. More updates tomorrow.